Well, the markets are down. Blame it on the weather. Ha! That's something else that you're starting to see floated around. Why is the PMI data down? Right, the primary manufacturing index. It's actually, I kind of figured it was if China was leading the charge and it was down, so the rest of the globe is down. The emerging markets are getting clobbered. Their currencies are getting clobbered. The ruble is rubble. Russia, ruble. Russia's having a lot of problems because, their mainstay is natural gas and oil. So if oil prices are down, that's really where they get a lot of their foreign cash. So that's down. But metals have been going up. Gold has a good day. Silver's had a good day. And everything. Markets are down. The Dow's below 50. Well, it's about 15.4 right now as we speak, and declining. And what's interesting is, they have the Citibank Surprise Index. They call it the Surprise Index. In other words, what's the Surprise Index basically is when it goes down, that means there's a wider disparity between what was expected and forecast and what actually came in. So, they're coming out with the excuses now. The weather. We've had a lot of severe cold winter weather, so deliveries were delayed, and that slowed manufacturing down. I am surprised they don't jump on the plastic snow theory. Some of the videos some people are posting on YouTube about plastic snow falling from the sky that burns and stuff. That could be slowing down productivity too and deliveries of goods. Who knows, right? Anyway, it's a joke and a half sometimes. I got to say this even about economical expectations and whatever you want to say, financial forecasts. It's when things are rosy, everybody thinks you're a hero. When things are down, they all freaking, they deride the other way. But it's interesting that, well, I don't want to say it's interesting. It's something I'm going to be very critical of, say, government policy or Federal Reserve policy in general, because they often create booms and busts in areas. And, for instance, like the housing market was one, and then, you had all these lenders that lend out all this money to people that probably shouldn't have had loans. But, it was going fine for all that time, and it's like they were big heroes when it was going up because they were getting people in houses they could not normally afford, and they're beginning to have their first house and all this kind of garbage. And what happens, when the bottom falls out and the housing market prices plummet, then all of a sudden the government comes and investigates all of them. But, it was government policy that created the situation in the first place. So, what's actually I could see for the future, government policy is going to create a currency crisis. We've had the housing crisis before. We've had the tech crisis, where the stocks plummeted to nothing. Some people out there were bullshit artists, I know, in the tech crisis because they were talking about all this infrastructure they're going to put up, and they got like $1 billion, and they just walked and they didn't do a damn thing, But, when currency crisis comes about, it's going to be brought about by the government itself. Precious metals will go into a bubble. And, George Soros already hinted some years ago, not many years ago, but some years ago, that gold is the ultimate bubble. He's talking about the future. When that happens, there's going to be a lot of resentment. And, I'd almost think the government's going to step in like, the big authoritarian hero, like they play that role all the time. And it's going to be like they're going to try to tax the hell out of you, maybe. Who the hell knows? I would almost suspect that it's almost like all the poor people that save precious metals now, they're going to be evil people. Almost like anybody who was evil back when they happened to be in the right spot because they sold a house at a high price or whatever the hell it was, So, but who actually creates all these bubbles? It's not just the market. It's actually exaggerated by government policy, or actually Federal Reserve policy. I don't even want to say it's the government per se, but the Federal Reserve. The banksters that call the shots. So, we may see a lot of turmoil here coming up pretty soon. And what I suspect is going to happen is Taper is going out the freaking window. They're not going to do it. And that's just that simple. So, and when that happens, maybe you'll see the markets go back up again. But for the things to go officially into, say, a bear market, you really need a 20% correction or more. So, we're far from that. I mean, we got a few percent. I mean, you're talking like down below, I don't know, maybe like 14, definitely below 14,000 on the Dow. You're talking, you got to get down there pretty, it's got to be correcting quite a bit before they're actually considered a bear market. But they may not let it go that damn far. Who knows? They may not let it go down that far. But, it looks like if this trend continues and, say, it does get down to maybe even a 15% correction, George Soros' bet already would have played out. In today's day and age, I don't think they're going to allow a 90% correction, like they had in 1932. That's not going to happen. But the thing is, when they start pumping the engines up again on, the printing presses, as you want to call it, where's the money going to go to? And, we're watching metals go up, not just silver, not just gold and platinum and palladium, but all the metals go up. Now, the only commodity that's not going up is oil, because oil is typically associated with high oil prices. It's typically associated with strong manufacturing. So when the markets go down, they go down. But base metals are doing well today too. So I have to say, it's like, there's a total disconnect basically between the spot price of reality and what, it really should be, the market should be dictating. The spot prices are rigged. They are rigged. Maybe they're not rigged up to the point where some people think that the price of silver should be, $800 an ounce, but, maybe the price of silver should be well north of 30. Well north of 30. That would make a major difference as to the survivability of the mines. Now, something else I want to talk about, even though this is not exactly a silver video, but as far as the miners go, that was the one area of the stock market that did like hell back in 2013, although the S&P itself rose over 30%, right? Had a stellar year, right? The best year in 16, 17 years. Now, the only part of the the stocks, the equities that did bad was the miners, but and especially the junior miners. But it looks like they've just accomplished, the junior miners have just accomplished the Golden Cross, whereas the 50-day moving average has crossed over the 200-day moving average, which is an extremely bullish sign. And today they've been reflecting some really good gains. So, the major media will tell you what's going to happen afterwards. I don't have a crystal ball into the future, but common sense goes a long, long, long way. And it's like you can't get too emotional about things one way or the other. The biggest trick is going to be, and this is going to take a hell of a lot of luck sometimes, is if, to catch the top on the metals whenever they go, because they may go a hell of a lot higher than they should. And the only way to, you're never going to be able to guess that. My advice is to keep constantly looking at that gold-silver ratio and do things in stages. That's your safest bet. But, from this point, from like $20 silver, you almost can't lose. You almost can't lose. The only problem is, I think that's going to come up is there's going to be, just looking at what happened to, it's like all these people were heroes in the housing market, for whether they were real estate brokers, developers, bankers, lenders, and whatever, and the markets were going good. But when they went south, it's like the government now looks at them like, they're looking at everybody under a microscope because, hey, did you guys do something wrong here or whatever? Of course they weren't doing anything wrong while it was going on because things were going up. I'd almost look at it, they're going to actually probably look at bullion dealers under a microscope and anybody who actually has bullion at that time when we actually, at the time when we have a future currency crisis. Just knowing how the government has been in the past, and I don't want to say the government per se, but it's almost like where they get the impetus from to be like that is there's going to be a lot of most people don't have silver and gold, and when it does go up, it's going to go up because people are scrambling to get it, and the price is going to keep going higher and higher and higher, and the have-nots, which are going to be a hell of a lot more than the haves, are going to be very resentful. So I just want to say, it's like anything else. It's like anything else. The people that got 30% more on the stocks and the equities back in 2013 is one thing. There's a lot of things that people don't see, and they don't understand. And sometimes you can get hellacious gains on leverage, and there's a lot of different things that go on in markets that are basically hidden from the public. I'm aware of some of that stuff, but it's like, but when something goes wrong, that's when all the finger pointing goes. And I suspect that when we actually have the real currency crisis, the government will probably blame it on the bullion speculators. Figure it out. That makes about as much sense as the people blaming the bad PMI on a winter storm. But that's probably what's going to be the game. And you got to remember, it doesn't have to make sense. If the common man believes it, it flies. Just like the common man was buying, or common woman, or whatever, was buying houses they couldn't afford, and they got under because they believed bullshit. Well, guess what? That's what happens. That's what happens. But I figure there's going to be a lot of resentment out there when gold and silver goes way the hell up, and they're going to blame it on the speculators. Watch. And I think oil is going to be way up there, and they're going to blame it up on the speculators. The speculators did it. Right. When it's down, they don't say that. But the thing is, it should be a hell of a lot higher than it is, because the miners, the junior miners in particular, are not making money. But it looks like, they just crossed, they did the golden cross where the 50-day moving average crossed over the 200-day moving average. So that means that's an extremely bullish sign for the miners. And that's the first time that's happened in a long time. So things may be on the way up. But anyway, it's amazing what these people say. And also, I got to say this about the unemployment statistics. They say that actually the federal government now, I think, is admitting that the job market is a lot tighter than, the statistics are showing with the unemployment, because they're counting unemployment percentage of people on the rolls. But there's so many people that dropped off the rolls, and there's so many high-dollar people working at, department stores and stuff like that took jobs that are probably paying, 1/5 or 1/10 of what they were making. A lot of people were making, netting $120,000 a year, and they're getting jobs for like, $25,000-$30,000 a year, that type of stuff. So, they consider those people employed. But even so, when you're looking at the total percentage of people that are employed out of the total potential population that could be employed, those numbers have not improved at all. They're staying rock steady. But like I said, it's even worse than that. So the economy's not improving, and like I said, this deal with QE and taper, I really, what the problem is with this, I didn't want to make this too long, but I have to tell you what it is. It only goes to the biggest banks. They bail out the biggest banks. If they got troubled loans, they buy them up. They got troubled assets, they buy them up. In other words, right? They made bad deals, they made bad bets, they buy them up. They shore up the banks. If they did like printed money per se, just printed money, and they said, we're going to have this irrigation project where we're going to grow all this food or hemp or whatever the hell it is, and it's going to be sponsored by the U.S. government, and we're going to get the best hard-working, workaholic contractors going to install the irrigation, till the land, and install the roadway infrastructure and electricity, and everything's going to be self-sustaining. Even electricity is going to be done by windmills or whatever the hell it is, right? If they got that, they just printed money and they put it in the hands of the hard-working, middle-class, blue-collar, skilled worker, and they had these big projects like that, the economic recovery would happen immediately. See, actually printing money could work if it goes in the right hands of people who actually are hard-working, productive citizens. Problem is, it goes in the hands of the too-big-to-fail leeches in Wall Street. Because I've always point to a video on the bottom of all my videos I put out, how the fiat money, local fiat money, actually saved the day in Austria during the Great Depression in the 1930s. They didn't even use as much fiat money as they thought they needed. It just got in the hands of the highly productive middle class. So, a little food for thought about that deal. So, we know what the problem is. It's not too hard to figure out.